Welcome to our another podcast. This one will be very special. You must have already seen this person online because he have close to 800,000 followers on Instagram, close to 1.5 million followers on YouTube. He's the king of minority mindset, educating majority of the people. Without further ado, let's welcome Mr. Jaspreet Singh.
Thank you for having me on. It's a pleasure to be on with you.
Thank you, Jaspreet. Thanks for taking your time out on a chilly day and coming to our podcast. Definitely a lot of things to discuss. When I was preparing about this podcast, I thought, oh, so much financial education for the people who will be watching.
Well, thank you so much. And first off, thank you to you for your support. Thank you, everyone, for your support. I'm here only because of all the amazing support from everybody who watches my videos and my content. So thank you all for that. The minority mindset, I started it on accident. So I think people know me for my YouTube channel. I have a YouTube channel called Minority Mindset, and I've always been an entrepreneur. But growing up in a traditional Indian house, Desi house, my parents were very strict on this idea of me becoming a doctor. And it was very, like you can either become a doctor or you can be a failure. There was no second option. And I was always told that the way I become successful is by becoming a doctor. Now, that wasn't a big deal for me because I wanted to be successful. Like, just like everybody else, parents who come as immigrants, you see how hard your parents work. So I wanted to give back to them. So that was okay. But at the same time, I had this entrepreneurial bug. I knew that I wanted to do something different when I was in elementary school. I started mowing my neighbors' lawns and charging them money. And my parents said, "Don't do that. Focus on your studies." When I was in, actually, it was in towards the end of middle school. I started playing the dole, the drum, at other Indian weddings, and my parents didn't like that. So then I had to start doing it in secret, and so I got to know a lot of the local DJs, and then we started hosting like parties and doing these things. Again, I had to do it all in secret because my parents didn't want me to do this. And so I always felt like I thought differently. And I was never kind of given an outlet to do the things that I wanted to, that creative side. So for me, that creative outlet was entrepreneurship. And I remember this was in the middle of my college career. I wanted to start investing in real estate. This was at the bottom of the 2008 crash. I'm in Michigan, so real estate prices were hit very hard. And I
Mhm.
told my dad that I wanted to invest in real estate. And essentially, he was like, "You're stupid. Go study. Focus on something that's actually important." And so I kind of in secret started looking at rental properties, and then I ended up buying a rental property while I was in college. And then I continued to learn more about these things because these are things that I had never grown up with. I didn't know what real estate investing was. No one in my family was an investor, let alone a real estate investor. I didn't know what entrepreneurship was. I didn't know how building a business worked. The only thing that I knew was medicine. That was the only career path that I ever saw. And so I started to learn more about entrepreneurship. And then I went through a lot of different businesses. Some did well, some failed, some that I shut down. Like the party business that I was hosting, it did really well. But then I really hated the industry because I don't drink, I don't smoke, I don't like that industry. And so I
Mhm.
just didn't feel right working in that industry. So then I decided to get away from that, moved away from that whole side. And then, I went through all these things and I always felt like I thought differently. So then after a business I was working on, I got scammed by a marketing company. And I'm not keeping this short because I don't want to make this too long of an answer, but I got scammed by a marketing company. And I
Mhm.
was so fed up after that point that I ended up creating a class online on Udemy on how to launch a business without getting screwed over. And this was like $7. And it's not there anymore. But when I launched it, I did it under the name Minority Mindset. The whole idea being you have to think differently than the majority of people. And
Definitely.
when I launched it, people really liked it. And they said, "Hey, Jaspreet, can you start a social media page?" So I said, "Okay." I started the social media page called Minority Mindset. And then I posted the same things: how to launch a business without getting screwed over, things that I wish that I knew when I was getting started. I talked about some
Mhm.
basics of financial education, things that I didn't know anything about when I was younger. And people said, "Hey, Jaspreet, can you start a blog?" Now, I'm not a very good writer, so I didn't start a blog, but I said I could talk. So I started a YouTube channel. So I started this YouTube channel, Minority Mindset, kind of as a hobby. And slowly that started to grow. and I was talking about all things from money management to investing to entrepreneurship, things that I had no education, formal education about, things that I wish somebody would have told me, just talking about things from my own perspective and my own opinion. And I think people resonated with it just because I talk from my own self. Like everything that I say is genuine. You might not like it, you might like it, but it's 100% genuine. Everything that I say is my own opinion, and it started to grow. And over the years now, Minority Mindset, the YouTube channel, has grown to over 1 million subscribers, which I never, ever, ever would have thought would be anywhere near here. And that kind of helped grow some of the other businesses that I have been working on. So that's kind of a long answer, I know, for your short question, but kind of summarizes what that all is.
So yeah, so now we know it's not we are not talking to a Dr. Jaspreet Singh. We are talking to a minority mindset
Yeah.
Jaspreet Singh, or maybe a lawyer,
Yeah, I am an
Jaspreet Singh.
attorney. So when my parents found out that I wasn't going to law medical school, there was this huge fight. A huge. My mom like couldn't believe. It took my mom over a year to believe that her son wasn't going to be a doctor. And so
Mhm.
towards the end of my college career, my parents were essentially like, if you want to keep any pride in the family, you have to at least become an attorney. So I was like, okay, I'll go to law school. But I knew that if I go to law school, I could do it part time while working on my businesses full time. Now my parents are full supporters of everything that I do. I mean, I love my parents, but it's just funny how things kind of go full circle. I am an attorney, but I don't work as an attorney, so that's how it all kind of progressed.
Yeah, definitely. I believe life is a journey, and those small learnings that you have while cutting the lawns or playing DJs, it had played a crucial role in being different from other people. And this is how we are connected to. We are connected just because you were on YouTube, you were on social media, people knew you, we approached you, we connected. Oh, it's Mr. Jaspreet Singh. We know, I've known this person. So that's the beauty. I think now most of the people, when you go out, people will be recognizing your face. They know you. Who's Mr. Jaspreet?
Yeah,
So
you know what's
that's
crazy? It's I never expected that. I never actually wanted that, which is kind of a crazy aside. I never wanted to be famous. So when I started Minority Mindset, that's why I did it under the alias Minority Mindset, because I was like, if I do this, I don't want to be the face of a brand. I want to make sure something that I build is scalable. I don't want to be a celebrity. I never liked that. And you know, for multiple times throughout the YouTube career, I tried to bring on other hosts for Minority Mindset. I had other people try to make videos on my channel. And what I saw happen every single time was when I tried to bring on somebody else, they would make these great videos, very educational, but the viewers didn't want to watch them. And I learned that people subscribe to Minority Mindset to watch me, not for
Mhm.
the network, right? If you go to the food channel on TV, you're watching whatever shows they put on. Well, on YouTube, when you subscribe to a channel, you're subscribing to the person, not the network. And when I learned that, I was like, well, either I can accept this and then go all in and become Jaspreet Singh, the Minority Mindset, or I can just keep kind of side tiptoeing this and never really kind of go all the way in. And this is actually in the last, I believe, 12 months that I made that decision. Okay, you know what? I will accept it and I'm going to be Minority Mindset. Minority Mindset is not a company. Minority Mindset is my personal brand. That is Jaspreet Singh. And then my other companies are my other companies. And so it was a tough thing because I'm not a social media person. I don't use my social media. I have a team that manages my social media. I used to be obsessed with social media, and it really kind of messed with my head because, like, I would be with my now wife, I'd be at dinner with her, and I would just be looking at my likes and doing all these things, and I realized this was really bad. So
Mhm.
I kind of did. I do things in extremes. So I went from being extreme on social media to then extremely off of social media. So now I try not to touch it. I try to stay away from it as much as possible. We have social media, but it's not me that's actually going there and taking pictures and videos. It's I have people that do that. So it's just kind of you learn, like what you said, life is a journey, and you learn what's right for you. And I personally like the time away from my phone because I see how toxic it can be to be on it all the time.
Definitely. No, that's I can relate to that because there are already 5 billion people on the social media platform. And one of the conversation we were talking about, in the future we'll have de-addiction centers just because of social media. So
Yeah.
that's what is happening to life. And one of the video I was talking, I think it was Patrick. He was talking about TikTok should be banned in US.
Mm.
It's already banned in India, right? So because a lot of energy at consumer, it's very addictive. No, I can completely relate to that. This is the power of it. But definitely, we need to be there. But now let's talk about your journey as a financial advisor. When I saw your videos, that's my view. I can see that I can easily click with you because you talk about $500, you talk about $1,000. It's not about millions and billions you're talking about. Definitely, you talk about it's a long-term process. I think that is what the majority of the people are into that mindset. How they can save $100, how they can save some money to build wealth. So how that resonates with you, tackling those issues for those majority of the people who lack financial educations in our system.
Yeah, so the first thing I want to say is I'm not a financial advisor. I'm not licensed as a financial advisor. I talk from my own opinions only. And it I think one of the things that we get confused on as people is how accessible wealth building is, because we assume that either, like the way I grew up was, you don't got to worry about it. You go become a doctor or something like that, and everything will just fall into place. Well, in
Definitely.
America, I don't know about Canada, but in America, I was actually just reading, there was a study that came out, I think it was in the last 5 days. It said that I think it was 60% or close to 60% of millennials earning $100,000 a year or more are living paycheck to paycheck. So 6 out of 10 young people making six figures or more are broke. And then a third, 1 out of 3 people who make over $250,000 a year are living paycheck to paycheck. So it's,
Wow.
you can make a lot of money but still be broke. So what's the discrepancy here? Well, it's what you do with the money and this financial education. Because then I started doing more research, and you see that there's some people who are less heard of, who earn very little, who have become incredibly wealthy. There's a guy whose name is Earl Crawley. He was a parking lot attendant, never really earned more than minimum wage. But when he retired, he had a investment portfolio worth, I think it was like $500,000, maybe a little bit more. And you look at that and it's like, how did somebody living off of minimum wage, raising a family, become successful like that? Versus you have high income people that have nothing. And that's where the power of financial education comes in. And the financial education, you can get into the nitty gritty as much as you want, but it's very simple. It's spend less than what you make and invest the difference. Spend less, earn more, invest like crazy. That's what I like to say, where it's, there isn't really a science or a formula or this magic 10-step thing that you need to do to become financially successful. You spend less money, earn more money, and then invest whatever you can. And when it comes to investing, this doesn't mean throw your money into a meme stock or something super risky. This means investing your money for the long term. Now, this is where then everybody says, but Jaspreet, I don't want to wait 40 years to become successful. Okay, then go back to the formula. If you want to become successful sooner, you need to invest more aggressively. How do you do that? Well, you can spend less or you can earn more. And there's a limit to how little you can spend, but there's no limit to how much you can earn. So now, how do you earn more? And now you start asking these types of questions so you know how you can hit whatever wealth metrics you have. And that's when you realize that becoming financially successful is less of luck and more of just math. And when you understand that, you'll start to look at money very differently, because money is a game. And just like how you can get better at basketball practice by practicing, you can get better at money by practicing too. And the way you practice is by making mistakes, it's by screwing up, by investing, by trying things. And not everybody's meant to be an entrepreneur, but everybody can be an investor. Everybody should be an investor. And the way you start, if you have no other investments, is you start by investing in yourself. And you can do that for free. Start by watching YouTube videos. You can watch my channel. If you don't like my videos, watch somebody else's. It's okay. I'm not going to be offended. I want you to become successful. I'm successful. I'm okay. So I don't really care if you don't like my videos. I want you to become successful. So start by watching videos. Then read books. Then once you see what you like, then maybe you take classes, you get coaching or whatever it might be, but then you start investing in yourself, and then you actually go out and do things. Maybe you start a business, maybe you try to invest your money into stocks or real estate, maybe you lose money, but the times when you lose, That's where you learn. And those
Mm,
losses are painful, but those losses are also where you learn the most. It's your real life tuition,
definitely.
and you cannot bypass that.
No, that's the so. But you summarize that secret formula in 2 words: spend less, the point where you earn, and invest that money, or invest in yourself so you can be more successful. Learn from those failures. You talked about on YouTube publicly. Everybody knows that formula. It worked for you. It have worked for other people. But why those majority of the people don't know about this formula and why they don't implement this? What is a link? What is a broken link here?
Well, I think it has to do with the our our distance of thinking.
Okay.
So I'll tell you, in our Punjabi culture, many times we like to spend money on the way we look or the way something looks. And I was the same way. I had when I was pre
More of a
Punjab
show off, show off. Okay.
to show off, and
Hmm.
for me, it was my car. I think a lot of people understand that. It's when I was starting to make money initially, all that I spent my money on was my watches and my car.
Okay.
That was it. And so when you are spending money on things like that, well, you're making somebody else rich at the expense of making yourself rich. And so now you have to make that decision. What do you want rather do? Would you rather be rich or would you rather look rich? Because you can't do both at the same time. You have to pick one. And in the beginning, you have to, if you want to become wealthy, is you have to actually become rich, which means you can't look rich. And that's hard because now people will make fun of you for the car that you drive. I today drive a very beat up car. To work today, I drove a $500 car. Now I'm gonna get a newer car, but as of now, my car is very beat up. I've been driving this car for many years. It has a lot of miles on it. It doesn't even have a bumper on it. It has a cracked windshield. It has rust on the sides. I have three different rims on it. And people will say, "But Jaspreet, wait, why are you driving such a beat up car?" Well,
Hmm.
I could go out and buy $100,000 car tomorrow,
Yes. Hmm.
or I could take the $100,000 and reinvest it back into the company. And right now, for the last number of months, I think the economy is slowing. And so I've been reinvesting back into the company. We've been building our teams, building our systems, getting ready for whatever's coming because I think that I could take, whatever we have and grow it a lot more if things continue to progress the way that they are. Now, I don't need a car right now. My car is driving. And it's just making those types of decisions. And again, I'm kind of an extreme. You don't have to follow what I do. I don't recommend anybody follow what I do, but I just tell you what I do. Find what's right for you.
Definitely. So we are talking to extreme Jaspreet Singh. If you're not buying $500 car, actually you can go for 5,000, but save some money and that'll help you grow. So I think the same mindset we have, I learned from my parents is you invest on yourself for 5 years and then you should be good in next 50 years. Or you lavishly spend these 5 years and then you regret all those 50 years. So that's
Yeah,
it's up to
very.
you the which way you want to take. That's what, and I believe we are first generation, or we as I like, we moved as immigrants. For immigrants, you need to struggle more because a new nation, new culture, new language, you need to
Yeah,
establish yourself from zero. And we have seen those hardship maybe for you, for your parents. I'm the first one here. I'm not that long to the system, but I can see that, I can feel it. Either you compromise now or you compromise later. That's a good formula.
it's a
But we
great
were
formula.
talking about, yeah, so you define financial freedom, like you invest more, all those philosophies. But what about the majority people who don't understand what is a financial freedom for a average person?
So, like, what would be financial freedom for them? Is that what you're asking?
Yes.
I,
So
I,
what is that actually? It looks too heavy word to me.
yeah. Well, I think it doesn't change based off of who you are. I think financial freedom should be the same for anybody, regardless of
Okay.
their background. Financial freedom is where you have enough income from your investments to cover your expenses. If you have enough cash flow from your investments coming in to cover your expenses, you're free. And this could be at
Definitely.
$3,000 a month or $300,000 a month. It really doesn't matter at that point because now you have the freedom to decide if you want to work the job that you're working. You have the freedom to decide if you want to go travel. You have the freedom to decide if you want to go to the gym at 12 p.m. or not. That is freedom. Now, how do you achieve that? Well, this is now working backwards. If that's the goal that you want, you have to start by thinking, how much cash flow do I need? And once you know
Okay.
how much cash flow you need, you got to find the right investments that can give you that cash flow. This might be stocks that pay you with dividends. It might be ETFs that pay you with dividends. This might be real estate investments that pay you with cash flow. This might be your own business if you can grow it big enough. And this doesn't have to be a static number. I think what happens with a lot of people is they think, okay, I need $5,000 worth of cash flow. But what happens in 40 years if inflation happens and this and that? You start creating all these scenarios. Just get started. Start. $10 of cash flow is better than $0 for the cash flow. And then you can start adjusting. What do you want to do? Maybe you don't even like cash flow. Maybe you realize, you know what, I don't like investing for dividends. I want to invest in growth companies because that's what's interesting. I want to invest in startups. I want to do real estate. It's just start. And
Yes.
once you start, then you can ask better questions for yourself. There's no blueprint to how you are going to achieve the success that you want for yourself. Everybody is different. My goals are different than yours. My risk tolerance is different than yours. My time horizon is different than yours. My experience is different than yours. My interests are different than yours. So you have to think now, okay, if I try to copy what Jaspreet does, even if you did exactly what I did, you're not going to see the same results that I did because it was a
Sense.
different time. Time has changed and interests are different. So now you start doing something and then you learn, you make mistakes, then you adjust for yourself. That's how real success is built. And you see this a lot in the entrepreneurial space. And it's really sad and unfortunate where, I'm not against online classes. I love online classes, but there's a lot of online classes that kind of prey on people's desires of trying to become rich quickly because everybody wants to become rich fast. Who wants to become rich slowly?
Yes.
But the
Hmm.
problem is then when when people pitch it as follow these 5 steps to $10,000 a month or something along those lines. Well, I bought those programs back in the day, and the problem is when you try to just copy what somebody else does, you're too late. Someone else has already done it. Now, the value in that is when you learn what they did and then you try to apply it to you. There's a big difference
Yes.
between copying and applying. Applying is where you can see infinite success. Copying is where you will never achieve as much as a person who actually did it because you're second or third or 1,000th. And so there's a big difference there, but that's where the real value is. And I mean, it's unfortunate, but this is why the majority of people will not be able to do it because the majority of people want to copy a proven formula as opposed to figuring it out for themselves.
Definitely. So I can understand that. So it's more about the application. Maybe we can learn from anyone everywhere. Why to pay for those online classes? You can learn from YouTube. There's so much free knowledge. We have Jaspreet. We have so many other smart people. Learn from that. And it's all about applying those things into your life. That's a good thought. And you talk about stocks. You talk about crypto. I can see you talk about Bitcoin. You talk about real estate. So you're everywhere actually. So how you differentiate between all those assets? Because let's say we are so much focused on real estate, we understand the real estate terms, we touch and we feel it. And how you differentiate about the portfolio, somebody who's taking the action, somebody who's starting the journey. There are so much things to do actually, I would say. There are so many options to invest. What is the right investment? But that's maybe a general answer on that. What is the best for someone who just want to start?
So uh, I'm going to recommend a book. I want to say one thing. So there is a great time and place to invest in your own education with money. I spend a lot of
Okay.
money on paying for education. YouTube is great,
Okay.
but sometimes if you want more, I do recommend paying for it because 99% of people
Yes.
don't go broke by investing in their financial education and read a lot of books. Now, there's a book by Sam Zell. He's a real
Mhm.
estate developer. I can't remember the exact name of the book, but if you look up Sam Zell, there's I should only be one book by him, and
Mhm.
he built his wealth in real estate. And one of the things that he talks about is people
Mhm.
know me as a real estate developer, but he's also an opportunist, meaning when he sees opportunity, even if it's not in real estate, he will take advantage of it. He made a lot of
Mhm.
money in the railroad business. He made a lot of money in the newspaper business because he saw opportunities there. And I kind of resonate with that because for me, I started investing in real estate. I was fortunate at the bottom of the 2008 crash. And the
Yes.
prices then were, I mean, you can't even compare them because there were, it was pennies on the dollar. And at that time, it was the best opportunity around me. So I started going all in on real estate, and I didn't have much of a stock portfolio at all. And I built up a little bit of a stock portfolio over the years just because I enjoyed learning about companies. But my stock portfolio really boomed. As when I say boom, I mean put a lot of money into it when the
Yes.
2020 pandemic hit, because the stock market in the United States, we lost almost 40% in 1 month. And I looked at that and I was like, this is a great opportunity. So I just came and just put a lot of money into the markets. And now all of a sudden my portfolio balance changed because I saw the opportunity there. And so it's more of like, where is the opportunity for you to, and what I'm saying right now is actively invest, meaning I look for a good deal and then I come in and buy. And so if I take now one step back and explain what I mean, I invest my money in two general strategies. And again, don't
Okay.
copy blindly what I do. Do your research. But I follow two general strategies. One is a passive strategy. One is an active strategy. A passive strategy is one that happens automatically, consistently, passively, no matter what. It doesn't matter what the market's doing. This is
Okay.
always on. So I have a passive strategy where money is automatically invested into the stock market. I have a passive strategy where I'm automatically buying Bitcoin every day, a little bit of it. And I have a passive strategy that buys me physical gold every month. This happens whether the market is up or down. It does not matter. This has been happening and it will continue to happen. Doesn't matter what's going on. I also have an active strategy. My active strategy is now where I look for good opportunities. So I actively invest in startups. I actively invest in real estate. I actively invest in stocks. So when I find good opportunities there, then I will come in and invest. Now, my biggest investment is in my own business. I talked about before how I have a couple companies. Well,
Yes.
the company that I'm most actively involved in is Briefs Media. It's my newsletter company. I also own Market Insiders that I run. And so I'm actively investing money, time into these companies.
Yes.
I will get a better return into my own company than I will in the stock market, but I kind of allocate some money so I have money to invest in other places. But that's where I invest because I run these companies and I believe in myself. Is it risky? Yeah, I could lose everything. Most businesses fail,
Hmm.
but that's like every investment. And experience is the best teacher. You're never guaranteed to make money when you invest. You might lose money, but that's the in any field, any industry, the people who succeed the most are generally 99% of the time the people that fail the most. And what you want to do is, you fail to learn, but then when you learn, it's you want to make more from your winnings than you did your failures, and that's the ultimate goal.
Definitely. So I like that strategy that you have a balanced portfolio. You are active, you are passive. For someone who is starting, they can create their own balance. Maybe they can start with $100 or 100,000. So based on the economy, we are already in the year end. What are your predictions? What are the best key assets to invest in 2023?
So I can talk about the American economy because that's kind of where I am, or that is where I am, but that's
Yes.
kind of what I understand better. Our U.S. economy is slowing. We have been raising
Yes.
interest rates aggressively to fight inflation. Mortgage rates are rising, interest rates are rising, and asset prices have begun to fall. Now, rising mortgage rates, rising interest rates have an effect because when you raise interest rates, it makes the cost of borrowing more expensive. The United States has the biggest debt bubble that we've ever had. We have more debt than ever. Where is this debt? We have the largest amount of national debt ever. We have passed $31 trillion worth of national debt. We have more corporate debt than ever. This is debt owned by corporations and businesses. And we also have the
Mhm.
highest amount of household debt ever. So people, businesses, and governments have the highest amount of debt ever than the history of time in the United States. At the same time, we have raised interest rates at the fastest rate ever in 2022, which means the cost of servicing this debt is growing
Gone
quickly.
up, yeah. Mhm.
So, what does that mean? Well, if I'm a business and my expenses are rising, well, that means that I'm going to have less profits, which might not be a big deal if I can grow my revenue fast enough, right? Debt is not a problem until it becomes a problem. Too much
Hmm.
debt is not a problem until it is a problem. And let me explain what that means so I can you understand where I'm going with this. If I bought a home for $1 million and I put down 20%, 200,000, and I finance the other $800,000, if I own the home and I have a because in the U.S. I know Canada doesn't really have these, but in the U.S. we have 30-year fixed rate mortgages where your mortgage rate is the same for 30 years. Well,
Yes.
if the property value falls to 700,000, I owe 800,000. Is it a problem? Well, no, as long as I can make the payments. Because if I can
Hmm.
make the payments, who cares if I'm underwater? But if I lose my job, now this becomes a problem because I can't refinance. I'm not going to be able to sell unless I have $100,000 in my bank to bring to the closing table. And now I'm stuck. So too much debt becomes a problem when it becomes a problem, which means that when you have an issue on the revenue side, on the income side, that then affects the expense side. And the question is now going into 2023 and 2024, we're seeing we will see more and more of the cost of this debt to rise.
Going up.
Corporate debt,
Hmm.
national debt, consumer debt. Now, we're also facing an economic slowdown. We're seeing our economy slow. We're seeing spending slow. We're seeing more and more people get hurt by inflation. And the kind of general consensus is that towards the end of 2023, that's when the excess cash people have through the pandemic stimulus that we sent out, that's when it will be dried up. So towards the end of 2023, that's when people will feel more of the pinch of the higher prices, which means people have less ability to spend while expenses are rising due to the higher debt costs. So I expect that we will see more economic pain. That's my opinion. Everybody has their own opinion. My opinion is we're going to see more economic pain in 2023 and into 2024. And so now you talk about where do you invest? Well, again, it's just where's the best opportunity for me? It's in my own businesses.
Yes.
And then, if you see good assets, whether it's stocks, whether it's real estate, if you believe in crypto, then you might be able to see a good investment there. Now, the one thing that I want to say about that is that crypto is very speculative. That I invest my own money into Bitcoin, and it's a small piece of my portfolio, right? I have a big piece of my portfolio, which is more of your kind of, I don't want to say necessarily stable, but more of your proven assets. And I have a smaller piece, which is more of my fun speculative. That's where my crypto falls. So if you're going to invest in crypto, fine. I personally wouldn't recommend making it your entire portfolio. But if you're going to invest in crypto, understand the risks, just like anything else. But the risks with crypto are even higher because it can go to zero, and you have a lot more volatility. And if you're not willing
Hmm.
to withstand that, then I don't recommend you investing in crypto.
Definitely. So you talked about physical gold. What are your thoughts on the gold, those limited assets we have, those metal?
I own gold. I've been buying gold for a long time now, and I buy it every month. To me, gold
Okay.
is just an alternative way of saving money. It's just hard money. I really don't care what the price of gold is. I don't really track the price of gold like that. I just buy some every month. I have an app that does it for me. It's the physical gold, not just you know the the ETFs or anything. There's apps that let you buy pieces of bars, and so for me, it's just an alternative to saving money. It's a hedge against inflation, and it's a hedge against it's like insurance. It's doomsday protection. If the worst thing happens and we see any sort of hyperinflation in our lifetime and the dollar goes to nothing, well, that's when gold can come in and it provides an alternative source of currency because what is money? Money is two things. Money is a store of value and money is a means of exchange. Our paper
Hmm.
dollars are a horrible store of value, but they're a great means of exchange. They're a horrible store of value because of inflation. $100 today is going to buy you way less than what $100 could 20 years ago, and it's going to buy you way less than what it could 100 years ago. Why? Inflation. But
Yes.
it, your gold doesn't see that same inflation like paper dollars because gold can't just be printed. It takes time, effort, and labor to mine gold. So gold is a better store of value, but not a very good means of exchange. And so it's just an alternative for me to save money. Um, And yeah, I mean, it's not. I don't think of it as an investment per se. I think of it more like an alternative to savings.
Definitely. So you talk about how you can avoid taxes being rich. So do you still believe in theory? Majority of the people must be confused how the rich people can avoid taxes, why they are not paying those taxes.
Well, the tax code is just the code. I mean, it's a rule book, and it tells you what you can write off and what you can't write off. It tells you what you can
Hmm.
deduct and what you can't deduct.
Hmm.
And the reality is, in the US, there are three categories of income: you have earned income, portfolio income, and passive income. Earned income, which is also known as ordinary income, this is the money you make from your job, your W 2. Your portfolio income is when you sell a stock for a profit. So if I buy
Hmm.
Amazon and I sell it for a huge profit, that's portfolio income. Passive income is income you get from your real estate investments or from your interest accounts. So if you put your money into a savings account and you generate interest, that's your passive income, that's that interest income. Now, the tax code gives the least deductions, least write offs, and the highest tax rates to your earned income, your ordinary income, the money you make from your job. But you get the biggest tax breaks, biggest write offs for your portfolio income and passive income. And so, what does that mean? If you are an investor or if
Hmm.
you are a business owner, now you get access to a whole new set of tax write-offs and tax deductions just because that's what the tax code says. Um, so what does that mean? It means that unfortunately, the way that the system works, the people who pay the highest taxes or the highest tax rates are the people who earn the highest incomes. And generally, this is the upper middle class. People like doctors and attorneys. If you're making a few hundred thousand or a couple $100,000 a year, now you're at the top of the tax code tax bracket because you're on the ordinary income and you don't get the deductions. What investors and to qualify as an investor, you don't have to be a millionaire or 100,000-aire. I mean, you could start with literally, like you're saying, $100 or $10. When you make money as
Hmm.
an investor, the tax rates here in America are lower for you. And you also have access to bigger deductions and bigger write offs. Same with businesses. You have the option to have more tax breaks. Again, you don't have to be a millionaire, $1 million business. You could be a business making $10,000 a year, but you still have access to more tax write offs. Now, there's a lot of arguments whether this is good or bad. Some people say that this is because it's a way that the government incentivizes you to start a business, to invest your money. The reality is, most of us are never taught this. And then most of us just get angry when we hear about it because you say, oh my God, why am I paying so much money in taxes, but rich people aren't paying in taxes? And it's an emotional argument. And
Hmm.
again, it's because of the lack of financial education. Because I was there when I learned about this, I was so angry because I was like, I'm becoming a doctor. I'm gonna have to work so hard. I have to study so hard to get there. I'm gonna have to pay all this money to get my medical degree. And then on top of that, I have to pay the highest taxes. Like it just didn't make sense to me. And then it's like, okay, what do you if this is what it is, you can either fight the system or you can learn the rules to the system. And to me, it was easier to learn the rules of the system and understand that because you don't have
Hmm.
to change your career. You don't have to change everything in your life, but you can understand some of the things that are happening and change some of the things that you're doing in your life, change some of the ways that you're using your money, change some of the ways that you invest your money. That way now you can benefit from the way that the system works. And that's really what financial education is. It's understanding the rules of the system. That way you can benefit from the system because guess what? Rich people are doing this and they're teaching their kids about this. This is what Robert Kiyosaki, Rich Dad Poor Dad, talks about. Is that rich people are doing this and they teach their kids. Everybody else, well, unless you figure it out yourself, you're the one that's just being screwed over by the system. And so it's like,
Definitely.
well, obviously it's, I have my own issues against the traditional school system because we're never taught this, but this is why I try to teach people about this because anybody can take advantage of this. But in order for you to do that, you have to have the right financial education.
Definitely. So you talk about the schooling system. What is the biggest liability students have? You being student, you have studied in this system. What is stopping you to be financially free? What are the biggest challenges you have to understand the economy system? Because it is your money, your finances. What is stopping you from doing that? What's the problem here?
The problem with the school, like the school system, or what, or people.
Yeah, it's more of the schooling system, or maybe it's with the people, right? Because we are the byproduct of what we are retaining, what the knowledge we have been injected into us.
Yeah, it's a really tough thing to answer because the reality is, we can easily say school should teach money, school should teach this financial education, but who's going to be
Yes,
qualified enough to do that?
that's a
And
good one.
that's it becomes difficult to answer because it's the same reason why schools can't necessarily teach entrepreneurship, even though they have entrepreneurship programs and entrepreneurship professors. If they haven't done it, how are
Yes,
you going to teach it? And so when you have a school system that's built with people who are teaching things that they have no real knowledge of, that they're just reading out of a textbook, how much are you really going to learn? And that's why I really like YouTube, because now you can learn from real teachers, people who are doing what they teach. It's decentralizing that education. The difficult thing is
mhm,
you have to be able to find a good teacher. Uh, you don't want to just start finding a bunch of bad education, because now all education is open, good and bad. And we're not trained to think like that. But it's just the school system is designed to breed employees. It's the way that the school system is. Because the goal of the school system is to get you to get a good degree.
job.
What does a good degree get you? A good degree gets you a good job. A good job
Job. Mhm.
gets you into the corporate ladder, the corporate system. Again, it's not a bad thing, but that is what it is. Now, if you want to become successful, you want to do more than just climb the corporate ladder. You want to work to invest your money so you can own a piece of the corporate ladder as well. And that was like the first thing where I never knew that that was possible, but that is possible. And in order for you to do that, you have to, one, think, is there anything else for me out there? Because the school system never teaches you that you can own a piece of the corporate ladder. They only teach you how to climb the corporate ladder. But the real wealth is built through owning a piece of it. And so it's a balance. Schools will never really be able to teach you that level of financial education. So where do you go? Now, thankfully, YouTube has become a much more accessible resource. And so you can learn way more from there. But it's just kind of, my goal is to open more people's eyes to this type of financial education, because you know we talk about how money, I mean, money is just one aspect of your life. Money can make you happier to an extent. If you don't
Mhm.
have money, money will make you happier. If you're struggling to pay your bills, if you money is one of the root causes of divorce, it's one of the root causes of suicide, it's one of the root causes of depression. When you don't have money, more money will make you happier. But once you have money,
Mhm.
now it's this, what can more money do? More money will then give you more financial freedom to do whatever you want, but more money will not make you suddenly like, you don't see this like linear line where every time I make an extra dollar, I'm going to be even happier.
Yeah, the happiness will go up. Yes. Mhm.
Your happiness eventually, like more money make you happier to an extent. After that, it's understanding what will actually make you happy. Money is just one part of your life. You have to be physically fit, you have to be mentally fit, you have to be spiritually fit, and you also have to be financially fit. Because anybody who says money doesn't buy happiness has no idea of either what happiness is, or they're already rich. Because if you don't have money and you're struggling to pay your bills, well, you're going to be pretty stressed. And that stress could carry you over to many parts of your life. It can make you eat bad. It can make you depressed. It can make you very anxious. It can make you lose your sense of purpose. So you have to have enough financial astuteness, awareness to understand that you need to be financially educated and financially stable. But then understanding kind of, we live holistic lives where there's more to life than money. Now, I talk about the financial side because that's where I felt like I was never really taught about, and something that I've spent a lot of time learning and a lot of my focus on, and something I really enjoy. I got a lot of passion, and I mean, it's something just to have a lot of fun about. So that's what I do. But don't get caught up on this idea that money is everything. Money is important. Don't get me wrong. Money is very important. The more you have, the more you can do. And that could be taking more better care of yourself, better care of your family, or better care of your community. But some people are so
Definitely.
poor that all they have is money. And so it's kind of that balance of what you need in life.
Definitely. I think that was a key learning you talked about. It's money is just a tool, one resource that you need to utilize to have the life spent well. Just for the time's sake, now we have a couple of minutes left. I'll shoot a couple of the questions that will more of to know about Mr. Jaspreet in person. Let's remove a minority mindset out of it, right? So let's talk about it. What would be your favorite trip that you would love to take?
Oh man, what would be my favorite trip? You know what? I haven't spent much time, because I started really traveling during the pandemic. I haven't traveled much outside of the U.S. and Canada.
Hmm.
I want to do. I'm planning some trips overseas, Europe. I've seen India or Punjab, but not much outside of that. So I'd love to see Asia and Europe and Africa and the rest of the world. Everywhere. I love exploring. I love doing
That's
things
good.
outside. I love. I know that's a very broad answer, but I love exploring.
No, that's good one, right? The things that doesn't excite you anymore.
You know what? Flashy things. I remember when I first started making money, all I could think of was buying myself a BMW, and I didn't because I started to reinvest. Now, the idea of getting a BMW, it's cool, but man, it's just not as exciting anymore. Now it's like, I'd rather just build a business, and it's crazy because now I can easily buy the car that I really wanted 10 years ago. I mean, it wouldn't even affect me, but it's just not as exciting. Flashy things don't excite me as much.
Definitely. What is your favorite color? I know that you tie a lot color of turbans, right? What is your favorite one?
It's funny. My wife asks me that question a lot, and I always tell her every color is my favorite color. It just depends. So
So you're not extreme here
I'm not
on the
extreme here.
colors.
No, not on the color scheme.
Okay, that's good. So any three books that you would recommend?
Start with Rich Dad Poor Dad, then
Definitely.
balance that out by reading Dave Ramsey's Total Money Makeover, and then for the third book, ooh, I'll recommend Harry Potter. Just to have a little bit of fun in there too. There's so many different business and money books out there. What I like to tell people is, if you want to get an MBA level education without paying for an MBA, go to Amazon, go to Audible, and find 25 of the top selling business books out there and read them. And these have got to be the
Definitely.
books that have some of the highest reviews. And you don't have to pick a particular one. Just go read the ones with the highest reviews, and you're going to learn so much after reading those 25 books, and it's going to cost you a fraction of an MBA.
Definitely that you learn from other people's experience. That's the one. What is your biggest failure?
I have so many.
I know.
If you want dollar amount, I probably, I try to build a blog for one of our sites, and I didn't have the time to manage it, so I kept hiring people to do it, and probably wasted $500,000 trying to build
Oh
it,
my
and
God.
lost all of that. So I mean, financially, that was a pretty big one. Um, I had a horrible real estate deal. Made a video about that on YouTube. My worst real estate deal ever. Uh, I mean, if you gave me a topic, I can give you a failure. I have made more mistakes than I made a lot of mistakes, a lot of expensive mistakes, and I made a lot of mistakes. But that's how you learn, right?
Definitely, you'll. Yeah, definitely. That's the key to that. It's life is like again we talk. It's all those steps, all those stairs that you need to take, the failure ones, and you learn from that. And three more most influential people in your life that impacted you, apart from your parents.
Oh, my grandparents then, um, my wife, and if it's apart from my family, then it would probably be a fan of mine who came up to me and told me essentially how my education changed his life. And he flew down to California to meet me at a meet and greet. And he told me about how he started changing his life because of my videos, because he was a really bad kid. And then he found out that his dad had cancer. And before his dad
Wow.
passed away, who was the biggest impact on his life, he bought his dad a home, and he showed his dad that he turned his life around. And he said it was because of me and the content that I put out. And so he gave me a picture of him and his dad, and I have it in my office here. It's framed. So that was a very moving moment for me to kind of see the impact of what I do.
Definitely. It's more about the community impact that you have, and it motivates you also. I can completely relate to that. And where you would love to live, obviously it's your home with your family, but any area, any city, any place.
You know what? I've been living in Airbnbs for a while, and I love this idea of just being able to travel. Like over the last year, I spent 2 months in Manhattan. I spent 2 months in San Diego. I spent a month and a half in Chicago. I would, if I could choose, I love kind of just continuing like this, living in different parts of the world because you get to see so much.
Definitely. So you just love exploring, right?
But I do
And
love
then
Manhattan.
any,
I'll put that there. Manhattan is my favorite city so far.
so if you're not a financial educator, you are not a lawyer, you're not a doctor, what occupation you would be?
I'm an educator.
Again, I like that actually. You just love sharing that. If somebody gives you $10 million tomorrow, where you will spend it?
I like cash flow. I like stability. If someone gave me $10 million, I'd probably just go out and buy some real estate and let that produce income for the rest of my life.
Love that, right? Any last thought for our audience and where they can find you? I know you are everywhere, minority mindset, but any thoughts? You do so much financial education. What anything you want to share about your experience, your journey, the last thoughts?
Well, if you want to find me as a Minority Mindset on YouTube or Instagram or wherever, you can. If you want to stay up to date on the financial news, go to briefs.co. Um, and last thoughts, the last thing I'd like to say is just the more you have, the more you can do. And it is your duty to take care of yourself, your family, and your community. Don't point fingers and tell somebody else to do it. Take the responsibility and make the change yourself.
For your own life. Thank you, Paji. Thanks for taking your time out. And then love from Canada. And we'll see you in next podcast.
Thank you, Bajus. It was nice talking to
Thank
you.
you. Yeah, take care.